Welcome to my first video explaining what project ARES is. I will use the stock BEIDU, the ticker is BIDU, to show the true potential of ARES. Everything you will see in this video is built into ARES, making it a full analysis and trading tool. No matter if you are a seasoned, experienced trader or a newbie, ARES will do the hard work for you and suggest what to do. ARES follows a very strict set of rules, maximizing the potential for big profits and minimizing possible losses, if any. If a setup doesn't comply to the strict rules, ARES will disregard this particular setup and show only setups with high probability of success. That being said, BIDU setup was great in every way, and I posted an alert on Twitter on September the 13th last year. But let me explain why this setup was so good and how ARES will show you this kind of setups on any other instrument. This is the weekly chart from the beginning to the day I posted the alert. The fundamental technical tool is the Elliott wave principle, which will show you where the price currently is regarding the waves. For those who are not familiar with Elliott waves, I will show you how the waves look like and how they predict future movement in price. Let's start from the beginning, and the Elliott wave oscillator will help to determine the wave tops and bottoms. Here is a top in price and top on the Elliott wave oscillator, which shows the wave 1. You can see the decline in price. Elliott wave turns red, negative, then it pops and the oscillator turns green and dives again. The Elliott wave oscillator gets red. This action is known as the ABC correction after 5 impulse waves and marks the wave 2 bottom. This was back in 2008 and 2009, but it is important for the correct interpretation of all waves. The price starts rising into wave 3, and again, like in wave 2, it drops into wave 4 and makes the last impulse wave toward wave 5 top. This is the whole impulse sequence consisting of 5 waves, and let's mark it green since it's bullish. According to Elliott wave theory, an ABC correction is due. Since the ABC corrections are in opposite direction of the impulse waves, it is bearish and has 3 waves: the impulse wave A, a corrective wave B, and the last impulse wave C. I will mark it red since it's bearish, so every correction in a bullish trend tends to be bearish. Important to note is this divergence between price and the Elliott wave oscillator. Price makes lower low, while Elliott wave oscillator makes higher low. It shows that the correction has ended and the new impulse sequence is starting. Most often the correction ends in the zone of previous wave 4. After 5 impulse waves and 3 corrective waves, we face another 5 impulse waves, and this time a very strong move pushes the price into highs of previous wave 5, marking the top of the wave 1. The second peak is higher than the wave 1 peak, and price declines into lower low comparing to the low right after the wave 1 peak. This is an expanded flat ABC correction into wave 2. Again, see the difference on the Elliott wave oscillator against price, this time a bearish divergence. Price rises into wave 3 top, pulls back into wave 4 and makes a new high on the wave 5. Not a usual wave sequence where the wave 3 is the longest wave. However, the wave 3 must not be the shortest wave in this sequence, and it isn't. The wave 5 it is, and it is the shortest wave, while the wave 1 is the longest, so the wave 3 is in between, smaller than the wave 1 but bigger than the wave 5. This wave structure is called a diagonal, and since it leads into the wave 5, it is an ending diagonal. Waves are getting shorter going into the top. This is the third impulse sequence of 5 waves followed by deep ABC correction. Impulse wave A, corrective wave B, and final impulse wave C. Let me stress out another thing regarding ABC corrections. These corrections can be of various types and structures. In this case, we have a 3-3-5 structure, meaning 3 impulse waves into wave A, 3 corrective waves into the wave B, and 5 impulse waves into wave C. The same structure was in previous correction. Another very common type is the 5-3-5, consisting of 5 impulse waves into wave A, 3 corrective waves into wave B, and again 5 impulse waves into wave C. When it comes to wave A, it can consist of either 3 or 5 waves, while the wave B has always 3 and wave C always 5 waves. Remember this is very important. Time for the final sequence of 5 impulse waves after this correction, starting with a very strong wave 1 and textbook pullback into wave 2. You see that price action is narrowing down, forming a triangle or wedge, and breaks out bullish into wave 3 top above the previous wave 5. Pulls back into wave 4, making ABC correction, and rises a bit higher, making a slightly higher high comparing to the wave 3, making the wave 5 top. Notable that the first impulse sequence is the longest, while the other two impulse sequences are almost identical in length. These 3 impulse sequences and 2 corrective sequences form an impulse sequence of a higher degree. We have 5 waves of higher degree ending with this top of wave 5 in 2018. This is a cycle degree of Elliott waves. It is obvious that after this impulse sequence comes a corrective one. The bearish divergence on the Elliott wave oscillator shows it. And like I mentioned before, corrective sequences most often end around the previous wave 4. This correction is significant and pulls the price from 285 down into 82, so it is a 71% decline. This deep correction has a textbook structure of 5-3-5. Wave 1 coming into the previous wave 4, you can see this on this level right here, pull back into the wave 2, then drops into wave 3, which corresponds to this cluster where was the previous triangle, or let's say wedge, and then a bullish breakout. A pullback again into wave 4, and we see the clean ABC corrections into both waves, the wave 2 and wave 4. You clearly see this A, B, and C. And finally we have a drop into the wave 5 of the wave A. 3 wave into wave B, and final wave C with a lower low. Important to see is this obvious bullish divergence between wave A and wave C low, meaning a new bullish impulse sequence is about to start. So here we are at the moment I alerted a long and hold on BADU around 120. The correction is over and price is good to rise into a new high beyond 285, the previous high on the cycle wave 5. This was my prediction looking at higher degree the supercycle. You can see the supercycle structure of 5-3-5. The whole bullish sequence I described was the 5 waves forming the supercycle wave A, then 3 wave correction into the wave B, and I expect a new 5 waves into the wave C around 360. Here is the post from September 13th, 2020, which corresponds to the last chart I explained. This is the post on Twitter. Zoom in and the divergence can be seen very, very clear. The price is coming into the high of previous wave B and should continue higher after the entry at 120. Let me show you the wave structure after the cycle ABC correction. There was a complete 5-wave sequence into this high, but since the price made a new high and pulled back below this previous wave 1, the wave 1 top shifted to this high and pullback should mark the wave 2 low. Okay, so let's go further and mark wave 3 top here and the pullback into wave 4 right here. Price rises into final wave 5, making yet another diagonal where the longest wave is the wave 1 and the shortest the wave 5. This is the cycle wave 1, formed of 5 primary waves. A correction is due and price pulls back below the previous wave 4, closing this gap right here, marking the wave A. 3 waves mark the wave B, and higher low after this gap the wave C, forming a flat ABC correction. Flat because the wave C ended above the wave A, not making a new low but rather a higher low. 2 waves out of 5 waves of this cycle impulse sequence are in place. So we have the wave 1 and the wave 2. From this point on, a new 5-wave impulse sequence starts with a new high and deep pullback forming a new higher low. The entry was at the bullish break above these two preceding bearish candles, so this bullish break was in fact the entry at 120. Price continues higher, reaching the highs of wave B, and an important level to watch for the potential wave 3 top is always the 161.8% extension of wave 1, which comes around 200. However, the previous bullish sequence on supercycle wave A had a top of wave 3 around 261.8% extension after wave 1. So it is important to draw in this level as well, around 255. Everything now depends on price action and smaller degree wave structure to show where the top of the wave 3 might be, but my bet was the 261.8, like in the previous impulse sequence. So the price tends to repeat the previous action. The stop is placed just below the low of the lowest low before the entry at 116. If we calculate the risk to reward ratio to the first possible target, so let's say we are looking at the target 161.8 at 202. With entry at 120, we have 82 as potential profit with just 4 as risk. The entry at 120 and the stop at 116 is in fact a $4 risk. The risk to reward ratio on this trade is 1 to 20. It is an unbelievable ratio, risking 1 to gain 20. This is what trading is about. Big gains with smallest possible risk. Wait until you see how insane the risk to reward ratio is to my preferable target at the 261.8% extension, or 255. It is an astonishing 1 to 33. Now tell me, who doesn't want to risk 1 to gain 33? No one. Everybody wants this type of risk on any trade, don't you? I believe you do. Okay, now the price breaks the high and game is on. The stop has been rolled to 132, eliminating any risk and even locking some profits. Price comes into the 161.8% extension and pulls back, indicating a possible wave 3 top. But there are no 5 waves to confirm the wave 3 top. So I stay long for the next target, the 261.8%, around 255. Consolidation below the 161.8 extension with no bearish sign yet. New breakout above 200, which shows that the price is indeed looking for my next target level. Very volatile price action reaching 240 with pullbacks suggesting we are near the top wave 3. There it is, 255 reached, but no wave structure to confirm yet. The pullback into wave 4 and rise into the wave 5 are missing in this particular structure. And that's exactly what happened. Price breaks above 260. Now we have the pullback into 230 and another bullish breakout reaching 270. Stop has been rolled to 230 on this low because we have a new bullish breakout. And profit from 120 is almost 90%, and it is locked. So at this point, if the price pulls back, you can't lose anything. Your profits of 90% are locked and guaranteed. Price continues higher, marking the 300 level. The 261.8% extension after wave 1 isn't a valid level for wave 3 anymore. Instead, we should look for the top beyond the 300 mark. Since primary wave 3 was beyond 261.8% of wave 1, the wave 5 should be above the 261.8 of wave 1 as well. Price is already above the 161.8 level of wave 1. So this is the level we are looking for the potential wave 5 and the higher degree wave 3 top. Price reaches slightly above the 261.8% of wave 1 at 324 and pulls back. This might be a valid cycle wave tree. So we have a structure of 5 waves, but we don't have enough waves in the final impulse wave, so I expect the price to go even higher. This last leg is not complete yet. Bam! 340, a new high, close to final target of 360. Hence my post on Twitter that BIDU reached 340 from entry at 120. Now we have 5 waves in the final impulse wave, and I can say with certainty that wave 3 top has been reached. The top is at 354.82. Less than $6 away from my initial target I set before I even entered the trade. Fairly close and accurate prediction, I would say. However, this is the cycle wave tree. There is a wave 4 pullback and wave 5 that remain to play out. But this trade of the wave 3, so from the wave 2 low into the wave 3, is in fact the holy grail of Elliott wave trading. Everybody can catch the wave 4 into the wave 5, but not many traders are able to catch the wave 3. So from the wave 2 bottom into the wave 3 top, like we did on this particular trade. Here you see why I said why we don't have a complete impulse sequence yet when price reached 261.8. So I'm making a slight little regression, and let me show you this one. After the pullback into the intermediate wave 4, the price rose into the wave 5. That was the moment I said before that this might be a valid wave 3 top, but the last impulse wave structure is missing, in fact, the last wave, the 5th wave. That's why we were waiting for a new high, and it did make a new high at 354. So in fact, this is what ARES will do for you, supporting you all the way, not just pointing you out an entry and target, but holding your hand to the end. On every pullback marking a certain wave, ARES will suggest you to add on your position, maximizing profits instead of riding this whole bullish trend with just one position. The great risk management will help you to put more positions into this trade with smallest possible risk. And if you remember, the entry at 120 had a risk of only $4. Only $4. And we managed to make this trade from 120 into well above 300, let's say 340. So that's almost 3 times. So I'm asking you, help us develop ARES for you. Fund the project. The link is in the description below the video. There is another link describing what ARES is and what is built into it. Once fully funded, after it has been developed, it will be free for everyone. Just download ARES, feed tickers into it, and you will have the best analysis and trading support tool ever created. Help us to help you. Cheers.